So I decided to step away from the office for a few minutes this afternoon, get out and take a little walk, but just had some stuff on my mind in light of a good handful or two of conversations that I've had in recent weeks, and maybe even going back to a month and a half to 2 months ago. And while I have a lot of meaningful and useful content within my course regarding debt management and credit cards, how the credit scoring system works, and credit score optimization strategies and techniques, I've had a lot of conversations lately, and I don't know if it is maybe a byproduct of just what's been going on within the economy here over the last couple of years, the cost of everything being higher than most of us have ever seen many items in our lifetimes. But I wanted to share some thoughts in regard to credit cards. And credit cards are not a bad thing. When used properly, they can be absolutely wonderful from the standpoint of helping to boost your credit score. And even if you find yourself in an instance where you need to carry a balance on a credit card or two for a while, it's not necessarily the end of the world. Yes, when it comes to borrowing money, credit cards are going to be ultimately the least desirable way to go about doing that, simply because of the interest rate that they normally carry, unless you are on some sort of a promotional offer or incentive for a period of time. How's it going? Good. So in a short-term capacity, and especially if there's some sort of a promotional offer or 0% for 12 months or 24 months, you need to understand the fine print and the details relative to that offer. But even if you're just dealing with, some bills that you maybe didn't have in the past, as far as just some expenses or life expenses or some reason that you needed to put some money onto, a credit card or two, again, it's not necessarily the end of the world. As long as you're aware of it, you're paying attention to it, and ultimately striving to, get that paid off as promptly as possible. But what I really wanted to talk about in regard to the credit cards is what having some balances on credit cards means relative to what we see if we're looking at a credit report from a lending perspective. I can't get into anything specific to mortgages because I do not have this channel set up with required disclosures and disclaimers for mortgage purposes. So just for the record, Matt Pfeiffer here, NMLS ID 296861, proudly representing Main Street Home Loans. It's about as much as I can say relative to mortgages, but just putting that in there for the sake of it. I have been finding that I have had a lot of conversations with clients recently where what I'm hearing them tell me is, okay, I have my car payment, I have my boat payment, or whatever it may be, some student loans. I have a couple credit cards that I use, but I pay them in full every month. Well, here's the thing that most people, I don't think, typically realize. And that is very simply that when you look at your credit card billing statement for a given month, the information that you're seeing on that billing statement is the information that, with most creditors, I can't say this is the case with absolutely every single one of them, but typically and traditionally with credit card companies or credit card providers, The information that you are seeing on that billing statement is the information that gets reported to the credit bureaus each and every month. So let's just say you run up $700 on a credit card. The bill comes in, it says you owe $700 and you have a minimum $40 payment. Even though you're paying that balance in full, let's say that same day or tomorrow, if a lender were to pull your credit, they are going to see a $700 balance and a $40 minimum payment. Let's say next month you run the credit card up to $900 and you have a $50 minimum payment. Pay the bill in full the next day. Pull the credit report after that cycle goes through, you're going to see a $900 balance and a $50 minimum payment, or whatever the details and variables are. But my point on all of this is, even though you are paying the card in full every month, the information that gets reported to the credit bureaus is what someone in a lending capacity is going to see. So even though you're paying the account in full, we still need to hold that minimum required payment against you in the analysis of your overall debt ratio. So, with that being said, if you are planning, and I shouldn't even say if you're planning on speaking with a lender, I'm just sharing this for the sake of you being aware of how the system works in that regard. So if you are a habitual, let's say, in full bill payer for your primary credit card or two or three, you may have a couple that you use at given specific stores and you still pay them in full every month. If that is the way you normally operate, a strategy or a technique, or just, it's not even really that deep. It's not a strategy or a technique. It's just awareness. Let's say that first scenario of running up the bill to $700 or $750 in a given month. Instead of waiting until the billing statement comes in showing that you owe $750 and you have a $40 minimum payment, if you were to go ahead and log into your credit card company portal, check to see what your balance is, and let's say this is 5 days before that billing statement normally drops. And if you look at any of your statements, you're going to see that, typically based on when the card was opened and activated and initially issued to you, your billing statement is going to run from whatever, the 10th of the month through the 9th of the next month, or the 19th of the month through the 18th of the following month. Point being, be aware of that and jump in and make the payment in full a couple of days before that statement drops, so that when you receive your billing statement, it shows a zero balance and a zero minimum payment. Now, in an ongoing capacity, month in and month out, if you were to get into the pattern of doing that, it could end up jeopardizing your credit score and actually hurting you a little bit, because the credit scoring models are now not aware of the fact that you are actually borrowing money each month and paying it back. Because if that data that gets reported to the bureaus is 0 and 0, so zero balance and zero payment, and that is month in and month out and month in and month out, the bureaus don't see a change. So they don't know that you borrowed $700 or $750 and paid it all back, because you did it inside that same billing cycle with the creditor. So you need to be aware of these little details and nuances as far as trying to, number one, optimize your credit score, but then If you are going to be looking to finance a vehicle or apply for a home mortgage, you also need to be aware of what we're seeing. And what really prompted me to want to talk about this was one scenario that I had seen recently where the overall dollar volume of balances on credit cards was not a large, volume of dollars, but there were a lot of small balances on a whole bunch of credit cards. So in the context of analyzing those numbers and looking at the impact that that would have on a client's debt ratio when they're having their numbers analyzed, if you had one credit card with $1,000 on it, you might have a minimum required payment on that of $50 or $60. But if you have 10 credit cards with $100 on each of them, well, each of those credit cards is going to carry some level of a minimum payment. Typically, by today's requirements, that's going to be $25, $30, $35. So let's just say you have 10 credit cards with $100 on each one and a minimum reported payment of $30 for each one. Well, if a lender is analyzing your debt to income ratio, you now have $300 in credit card obligations as opposed to $40 or $50 if all that money was just on one card. So it's just something to be aware of depending on what you have going on in your world and what you may have upcoming on your horizon as far as needing to maybe speak with a lender for a home, for a car, for a boat. These key little factors and details are something to definitely be aware of so that you can plan to ensure that whatever it is that you're financing, that process goes as smoothly as possible and you don't potentially run into issues because of the way a credit profile or report might look just at a given moment in time. Being strategic and calculated with how you approach your finances and borrowed money is critically important when you are looking to possibly borrow money going forward into the future. Having a basic understanding of how credit scoring models analyze data to generate the score is really, truly just beneficial for you to help make sure that throughout the course of your life, you don't end up spending more when you have to borrow money than, let's say, what might be necessary. So an optimized credit score at the moment that you're financing something generally is going to lead to more attractive financing terms, which is going to save you money on the cost of whatever it is that you're financing. Coming into a scenario or a transaction where you're not quite sure what's going on and you just, you're checking Credit Karma and my score looks pretty good. It, depending on what the details and the numbers and the items are within your credit profile, it has the potential to lead to less than ideal or less than perfect terms based on whatever it might be that you're financing. So simply looking to create a little bit of awareness for you and hopefully help you have a slightly better understanding of how some of these elements, especially as it pertains to credit cards and your credit profile, how they could impact you when you need to borrow money in the future. If you ever have any questions about anything, feel free to reach out, send me a message, and I would be happy to help and guide in any way that I can. If you haven't checked out my course, I would genuinely recommend that you do that. I poured my heart and soul into creating that, spent over a year in all of the production and the content. This was not hired out or outsourced. All the information in there is from my almost 30 years of experience in mortgage financing industry, as well as some insurance and financial planning industries in years gone by. And I really designed the course to allow you, especially if you are younger in age, and let's call that 18 to 25. I built this course out from a foundational and principle perspective to give you all the kinds of information that you typically are not going to be taught in school. And if you came from a household where you had any financial advice or literacy come your way from your parents, that's wonderful. But many people don't have that privilege. So they start life kind of blindly, not having a basic understanding about some of the key items and things that you're going to have to deal with, as you move out or get your first job or start, living on your own as an adult human being. And minor little things that could seem inconsequential when you're 24 years old can have a lingering impact when you have to take important steps in life going forward. And the whole spirit of why I put this together was to help you just have a better understanding of these key variables to help you truly live your best financial life. Make it a great day out there. Thanks for watching. If you know anybody that could use this information or benefit, please feel free to share, and go ahead and subscribe if you'd like to see future content when that drops. Make it a great one out there, and I will look forward to sharing some information with you again before too long. Well, hey there, if you're still watching this, I'd like to thank you for tuning in, watching this video, and also for tuning into my channel. Whether it be for yourself or anyone that you may know, feel free to share this video. And if you'd like to see future content, go ahead and subscribe. If there's anything that I can do for you, please don't hesitate to reach out. I built out my course with the heartfelt passion of wanting to enable folks to get started on a better foot in life regarding finances and not incur some of the problems I have witnessed throughout the course of my career that has held them back from taking next steps when they were ready to in their life journey. I thank you again for watching. If there's ever anything I can do for you, I'll look forward to hearing from you. Take care.